If you're new to the world of cryptocurrencies, it can be overwhelming trying to understand all the different terms and jargon that get thrown around. But don't worry, I am here to help. In this video, we'll break down some of the most commonly used terms in the crypto space, so you can feel more confident navigating this exciting and rapidly evolving industry. Altcoins is a term used to describe cryptocurrencies that are alternatives to Bitcoin. Bitcoin was the first and most well-known cryptocurrency, and it has often been referred to as the gold standard of the crypto world. However, since its creation, many other cryptocurrencies have been developed and launched, each with its own unique features and characteristics. Blockchain is a decentralized, digital ledger that is used to record transactions and track the ownership of assets. It consists of a series of interconnected blocks, each of which contains a list of transactions. Once a block is added to the chain, it cannot be altered or deleted, making the blockchain an immutable record of all the transactions that have occurred on the network. Mining is the process of using specialized computer hardware to solve complex mathematical problems in order to validate transactions on a blockchain network and earn a reward in the form of cryptocurrency. Miners play a crucial role in the cryptocurrency ecosystem, as they are responsible for securing the network and ensuring the integrity of the ledger. Cryptocurrency mining can be a resource-intensive process and carries inherent risks, including the risk of hardware failure and the risk of the value of the cryptocurrency decreasing. Wallet is a digital wallet that allows users to store, send, and receive cryptocurrencies. It consists of a public address, which is a unique string of letters and numbers that can be shared with others in order to receive cryptocurrency, and a private key, which is a secret code that allows the owner to access and spend their cryptocurrency. Seed phrase, also known as a recovery phrase or backup phrase, is a set of words that is used to recover access to a cryptocurrency wallet. It's a crucial security feature that allows you to regain access to your wallet if you lose your password or if your device is lost or stolen. APEING is when you buy a crypto token shortly after its launch without doing proper research, often out of fear of missing potential gains. This behavior involves taking on risk without conducting thorough due diligence, and can potentially lead to losses if the token does not perform as expected. It is important for beginners to carefully evaluate the prospects of a token before making an investment, rather than acting impulsively out of FOMO, fear of missing out. HODL, or hold on for dear life, is a term that originated in the crypto community and has become a popular meme. It's a misspelling of the word hold, and it refers to the act of holding onto a cryptocurrency, even during times of market volatility or price drops. The idea is to hold onto the cryptocurrency for the long term, rather than selling it at the first sign of a dip in price. Shill is a term used to describe someone who promotes a particular product or idea in a biased or excessive manner, often for personal gain. In the crypto world, shilling refers to the act of promoting a particular cryptocurrency or blockchain project in an overly positive or biased way, often without disclosing any potential conflicts of interest. Whitepaper is a document that provides detailed information about a particular product, technology, or concept. In the crypto world, a whitepaper is often used to describe the technical and philosophical underpinnings of a particular cryptocurrency or blockchain project. Moonbag is a term used to describe a cryptocurrency investor who holds onto a particular coin in the hope that its price will moon, or significantly increase in value. The term is often used in a humorous or mocking way, and it suggests that the investor is overly optimistic or naive about the potential price appreciation of the coin. REKT is a slang term that stands for REKT. It's often used in the context of cryptocurrency trading to describe a situation where an investor has suffered significant losses. For example, someone might say that they were wrecked if they invested a large amount of money in a cryptocurrency that ended up losing a lot of value. Just to let you know that I have made a video about what is cryptocurrency and how does it work for beginners, you can view that video right here on the top. Tcoin is a term used to describe a cryptocurrency that is deemed to be of low quality or has little value. It's often used to refer to cryptocurrencies that are created for the sole purpose of making a quick profit for the creators, rather than providing a genuine product or service. They are often characterized by their lack of utility, low liquidity, and questionable legitimacy. They may also have a low market capitalization and a low level of adoption by users. Token. This refers to a digital asset that represents a particular item, service, or utility. Tokens can be used for a variety of purposes, such as representing a share in a company, a voting right, or access to a particular service. ICO, an initial coin offering, is a way for a company or organization to raise funds by selling tokens. It's similar to an initial public offering, IPO, in the traditional financial world. Smart contract. This is a self-executing contract with the terms of the agreement between buyer and seller being directly written into lines of code. The code and the agreements contained therein are stored and replicated on a blockchain network. Airdrop. This is when a company or organization distributes tokens for free to a specific group of people, usually as a marketing campaign or as a way to distribute tokens to a community. Fork. This refers to a split in a blockchain, resulting in the creation of two separate chains. There are two types of forks: a soft fork, which is a backward-compatible update to the blockchain, and a hard fork, which results in a completely separate blockchain with different rules. Whale. This term refers to a person or entity that holds a large amount of a particular cryptocurrency. They can have a significant influence on the market due to their size. Private key. This is a secret piece of information that allows you to access your cryptocurrency wallet and make transactions. It's important to keep your private key secure, as anyone who has access to it can access and spend your funds. Public key. This is a unique identifier that allows others to send cryptocurrency to your wallet. It's derived from your private key and can be shared publicly. KYC, Know Your Customer, is a process that involves verifying the identity of a customer or user. In the crypto world, exchanges and other platforms may require users to go through a KYC process in order to comply with anti-money laundering and other regulations. Satoshi. This is the smallest unit of a Bitcoin, named after its creator, Satoshi Nakamoto. It's equivalent to 0.00000001 Bitcoin. Hash rate. This refers to the processing power of a cryptocurrency network. The higher the hash rate, the more secure the network is and the more difficult it is to attack. Pump and dump. This is a tactic where a group of individuals artificially inflate the price of a cryptocurrency by buying large amounts of it, then selling it off quickly once the price has risen. It can lead to significant price volatility and is considered unethical. Sharding. This is a scalability solution for blockchain networks, where the network is divided into smaller pieces called shards, which can process transactions in parallel. This can improve the speed and efficiency of the network. DeFi, decentralized finance, refers to financial applications and services built on blockchain technology. It aims to provide financial services in a decentralized and transparent manner, bypassing traditional financial institutions. Liquidity. This refers to the ease with which an asset can be bought or sold on the market. A liquid market has a high level of trading activity and a low spread between the bid and ask prices, making it easier to buy and sell the asset. Bearish. This term refers to a negative or pessimistic outlook on the market. A bearish investor believes that prices will decline. Bullish. This term refers to a positive or optimistic outlook on the market. A bullish investor believes that prices will rise. Gas fee. This refers to the fee required to execute a transaction on the Ethereum network. It's paid in the network's native cryptocurrency, Ether. DAO, a decentralized autonomous organization, is a type of organization that is run using smart contracts and operates on a blockchain. It's designed to be decentralized and autonomous, with decisions being made by its members through voting. NFT, a non-fungible token, is a type of token that represents a unique, one-of-a-kind asset. They are commonly used to represent digital art, collectibles, and other types of rare or unique items. Lightning Network. This is a layer built on top of the Bitcoin blockchain that allows for faster, cheaper transactions. It works by creating a network of payment channels that can be used to send Bitcoin off the main blockchain, reducing the load on the network. Atomic swap. This is a way to exchange one cryptocurrency for another without the need for a centralized exchange. It uses smart contracts to securely facilitate the exchange. Burn. This refers to the process of permanently destroying a certain number of tokens, reducing the total supply of the cryptocurrency. It's often done as a way to increase the value of the remaining tokens. Staking. This is the process of holding a certain amount of a cryptocurrency in a wallet and participating in the validation of transactions on the blockchain. In return, stakers are rewarded with a portion of the cryptocurrency's block rewards. Oracles. These are external data sources that are used to provide real-world information to smart contracts. They can be used to trigger certain actions within the smart contract based on external events. Multi-sig, or multi-signature, refers to a type of wallet that requires multiple parties to sign off on a transaction before it can be executed. It's a way to increase security and prevent unauthorized transactions. Cold storage. This refers to the practice of storing cryptocurrency offline, typically on a hardware wallet or a paper wallet. It's a way to secure your assets and protect against online attacks. Dapp, a decentralized application, is a software application that runs on a decentralized platform, such as a blockchain. dApps are often open source and decentralized, and they can be built on top of various blockchain networks. Governance. This refers to the way in which a cryptocurrency or blockchain network is managed and decisions are made. Some projects have decentralized governance structures, where users can participate in decision-making through voting, while others have more centralized governance structures. Off-chain. This refers to transactions or data that are not recorded on the blockchain. Off-chain transactions can be faster and cheaper than on-chain transactions, but they may not have the same level of security and transparency. Sidechain. This is a separate blockchain that is connected to a main blockchain and allows for the transfer of assets between the two chains. Sidechains can be used to experiment with new features or to scale a blockchain without affecting the main chain. Mooning. This refers to a significant increase in the price of a cryptocurrency. It's often used in the context of mooning to the moon, meaning that the price has increased significantly. FOMO, fear of missing out, is a term used to describe the feeling of wanting to join in on an opportunity or trend, especially when it comes to investing in cryptocurrency. It can lead to impulsive or reckless decision-making. FUD stands for fear, uncertainty, and doubt, often used to describe the spreading of negative or false information about a particular cryptocurrency or blockchain project. It can be used to manipulate the market or to discourage others from investing in the project. Lambo. This is a shortened version of Lamborghini, and it's often used as a joke or meme in the crypto community to refer to the idea of becoming rich from cryptocurrency investments. Hashing. This is the process of taking an input, such as a transaction, and running it through a cryptographic hash function, which produces a fixed-size output, called a hash. Hashing is used to secure the blockchain and verify transactions. Centralized. This refers to a system or network that is controlled by a single entity or group. In contrast, decentralized systems are distributed and not controlled by a single entity. Non-custodial. This refers to a type of cryptocurrency wallet that gives the user full control over their private keys and assets. In contrast, a custodial wallet is one where the user does not have control over their private keys and the assets are managed by a third party. Gas limit. This is the maximum amount of gas, or fees, that a user is willing to pay for a transaction on the Ethereum network. It's used to prevent users from accidentally overpaying for a transaction. 51% attack. This is a type of attack on a blockchain network where an attacker controls more than 50% of the network's computing power, allowing them to control the network and potentially reverse transactions. Proof of stake. This is a consensus mechanism used by some blockchain networks, where the next block is chosen based on the number of tokens a user holds and their willingness to stake them. It's an alternative to the proof-of-work mechanism used by networks like Bitcoin. Smart contract platform. This refers to a blockchain network that is specifically designed to support the creation and execution of smart contracts. Examples include Ethereum and Binance. Thin client. This is a type of cryptocurrency wallet that does not download the entire blockchain, but rather relies on a third-party server to access the blockchain and make transactions. Two-factor authentication. This is an additional layer of security that requires a user to provide a second form of authentication in addition to their password, such as a code sent to their phone or a biometric scan. It's often used to secure cryptocurrency wallets and exchanges. Peer-to-peer. This refers to a decentralized network where each participant can act as both a client and a server, allowing them to communicate and transact directly with each other without the need for a central authority. Segregated witness. This is a technique used to improve the scalability and efficiency of the Bitcoin network. It separates transaction data from the signature data, allowing for more transactions to be included in each block. Altcoin season. This refers to a period of time when altcoins, alternative cryptocurrencies, see significant price increases and outperform Bitcoin. It's often used to describe a bull market for altcoins. Exchange listing. This refers to the process of a cryptocurrency being added to a particular exchange, allowing it to be bought and sold by users of that exchange. A listing on a major exchange can have a significant impact on a cryptocurrency's price and liquidity. Private blockchain. This is a type of blockchain that is not publicly accessible and is controlled by a single entity or group. It's often used for internal processes within an organization. Fiat on ramp. This refers to a platform or service that allows users to buy cryptocurrency using traditional, government-issued currencies like the US dollar or the euro. Mempool. This refers to the pool of unconfirmed transactions on the Bitcoin network. Transactions remain in the mempool until they are picked up by a miner and included in a block. Double spend. This is an attack on a blockchain network where an attacker attempts to spend the same cryptocurrency twice, potentially leading to the loss of funds. It can be prevented through the use of decentralized consensus mechanisms. Public blockchain. This is a type of blockchain that is publicly accessible and decentralized, allowing anyone to join and participate in the network. Examples include Bitcoin and Ethereum. Plasma. This is a scaling solution for blockchain networks that allows for the creation of child chains that can be used to process transactions off the main chain, reducing the load on the network. Stablecoin. This is a type of cryptocurrency that is pegged to a stable asset, such as the US dollar, in order to reduce price volatility. Stablecoins are often used as a way to store value or facilitate cross-border transactions. Cryptocurrency ETF, an exchange-traded fund, is a type of investment vehicle that tracks a particular asset or group of assets. A cryptocurrency ETF allows investors to invest in a basket of cryptocurrencies without having to directly hold the assets themselves. Proof of work. This is a consensus mechanism used by some blockchain networks, where the next block is chosen based on the user's ability to solve a complex mathematical problem. It's used to secure the network and prevent attacks. Exchange rate. This is the value of one currency expressed in terms of another currency. In the crypto world, exchange rates refer to the value of a particular cryptocurrency in terms of a traditional, government-issued currency like the US dollar. Cryptocurrency exchange. This is a platform that allows users to buy, sell, and trade cryptocurrencies. Exchanges can be centralized, meaning that they are controlled by a single entity, or decentralized, meaning that they are run on a blockchain. Distributed ledger technology. This refers to the use of a decentralized, digital ledger to record transactions and track the ownership of assets. It's the underlying technology behind many blockchain networks. Cryptocurrency market cap. This refers to the total value of a particular cryptocurrency, calculated by multiplying the current price by the total supply of the cryptocurrency. It's often used to compare the relative size of different cryptocurrencies. The crypto space is constantly evolving and new terms and concepts are being introduced all the time. It's important to do your own research and continue learning about the crypto world in order to stay up to date with the latest developments. That being said, I've provided a wide range of terms and lingo that are commonly used in the crypto world, covering a variety of topics such as wallets, exchanges, mining, consensus mechanisms, and more. I hope this video has helped clear up some of the confusion and that you feel more confident diving into the world of cryptocurrencies. Like and subscribe. Thanks for watching and see again in the next video.